Hi everybody, in this video, I will show you guys a 3 EMA scalping trading strategy. This may be one of the best absolute methods for trading. This strategy works on all markets and can be used by both beginners and professionals. I'm going to be explaining every detail regarding this strategy and the indicators used in it. After that, we'll go through multiple examples for a buy and sell trade, and we'll also go through some false signals and see how we can stay away from them. Before we start, nothing in this video is financial advice. It's all for informational purposes only. So I'm in Tradingview and I'm using Bitcoin USD chart on a 1-hour time frame. And this is what your chart is going to look like when we are done setting up our chart. So I'll quickly cross out these so that I can explain everything from the beginning. So this is what your chart is going to look like when you first enter the Tradingview. Okay, now let's begin to build the setup step by step. First, we need to click on an Indicators tab and search for Exponential Moving Average, and we'll add 3 of them. Now, let's access the setting for one of them. We'll change the length from 9 to 13, and let's change this color to green. The next step will be to access the settings on a second EMA and change its length to 8, and let's make this line a bit thicker. Finally, let's double-click on a third EMA and change its length from 9 to 5. Let's also change its color to red. Now we'll add another indicator to the chart. So in the Indicators tab, we'll search for Parabolic SAR. Add this one right here. Alright, now the setup is ready, so let's understand the trading rules. These are the rules for entering a buy trade. So a buy signal is confirmed only when the following conditions are met. Number 1, the red EMA should cross above the blue EMA and the green EMA. Number 2, the blue EMA should cross above the green EMA. Number 3, the parabolic SAR should be below the price action. So as all the rules are confirmed, we'll enter a buy trade at the close of this candle. The stop loss will be placed slightly below the recent swing low, and for this strategy, we're going to be targeting 3 times the risk. So this trade would have ended in a profit. Now let's take a look at the rules for entering a sell trade, which are exactly the opposite. First, the 5 EMA, which is the red line, has to cross below the 8 and the 13 EMA. Second, the 8 EMA, which is the blue line, has to cross below the 13 EMA. And finally, the parabolic SAR dots must be above the price action. So we'll enter this trade right here, and the stop loss will be set slightly above the recent swing high. Our take profit target will stay the same for a sell trade, and this would have been a successful trade. As we can see, this strategy is very easy. Pretty much anyone who has a basic experience in trading can use it. However, I do believe that sometimes easy isn't always good. If we take a closer look at the strategy, we can see that the parabolic SAR doesn't really do anything to eliminate false signals. Notice when the EMAs gave us a long signal here, the parabolic SAR also confirmed it, and if we had entered this trade, it would have turned out to be a loss. So please backtest this strategy yourself before using it. We can definitely improve this strategy with the help of another indicator, so let's do that. The first step will be to get rid of this parabolic SAR indicator and add a different confirmation indicator. For this, we'll go to the Indicators tab and search for the stochastic RSI. The next step will be to change the length of these moving averages. So first, let's replace the 13 EMA to 100, the 8 EMA to 50, and the 5 EMA to 20. Now we have the setup ready. Let's learn the trading rules for this now. This is a very smart entry technique and is for advanced traders only. So for a buy setup, you want to have the following conditions met. First, the moving averages must be aligned in a way so that the first go 20, then it goes 50, and on the bottom, we have the 100 EMA. Second, the price action must pull back into the 50 EMA as it does here. And before the pullback, it obviously needs to be above the EMAs. Third, a bullish engulfing candlestick must be formed after a bearish candlestick that's touching the 50 EMA. And fourth, the stochastic RSI must get oversold during the pullback. Once we have these conditions met, we can enter a buy position. So we'll enter as soon as the stochastic breaks above the 20 level and the bullish candlestick is formed. The stop loss will be set at the recent swing low. And this time, we're going to be targeting 1.5 times the risk. And you can see this trade would have ended in a profit. By the way, if the price action exceeds the 100 EMA, the signal automatically becomes invalid. Now let's take a look at one more buy example. Here we see the EMAs are positioned in a way so that they indicate an uptrend. The price action pulled back into the 50 EMA, A bullish engulfing candlestick was formed after the most recent bearish candlestick that touched the 50 EMA. The stochastic also got oversold, and notice when it got out, the market formed a bullish candlestick. So we'll enter here, set our stop loss right here, and for a risk to reward 1.5, our trade would have ended in a profit right here. Now for a sell trade, the rules are exactly the opposite. First, the EMAs must be aligned in a way so that on the bottom we have the 20, in the middle we have the 50 EMA, and on the top we have the 100 EMA. If they are positioned this way, the downtrend is officially confirmed. The second condition will be to have the pullback where the price action touches the 50 EMA, or if it's very close to the 50 EMA. And the stochastic must also get overbought. An engulfing bearish candlestick must be formed right after the most recent bullish candlestick that's touching the 50 EMA. And for the sell entry, we're going to be waiting for the stochastic to break below the 80 level and the market to form the bearish candlestick. So we'll enter here at this candlestick. The stop loss will be set at the recent swing high, and the take profit target will be set at 1.5 times the risk. And this would have been a successful trade. The strategy might seem a bit complex, but once you have mastered it, it's going to be very easy for you to spot the perfect trade entries. So basically, that's the gist of the strategy. I definitely recommend using the improvised strategy over the first one. But again, backtest it so that you can understand the potential of this strategy better. I hope you found this video useful. If you liked the video, make sure to hit the like button, subscribe to my channel, and hit the bell. Thanks for watching, and I'll see you guys in the next video.